Okay, so you should all now be seeing those of you who are logged on, you should see our little Meetup homepage there. Tonight's event's is a free webinar on tax and accounting for creative professionals in the US. Basically, this is just sort of like an open Q&A session with one of our experts here today. And, we've had people email in questions. And, it's more or less a fairly open discussion like that. Creatives International is basically a support network for anyone coming to the US trying to do something creative, basically. We provide different sorts of seminars and different events throughout the year to sort of help people get in touch with each other and provide them with the same sort of information most of us are going to need. Subject like tax, I mean, it's death and taxes. It's getting the visa is the first step of coming over here, but then once you're doing it, a lot of these questions will come up quickly. And what we found with our clients is they tend to ask a lot of the same questions, so we wanted to invite a professional on to answer them properly. Now, some of you might have come to us through our Facebook event that we did post today. Feel free to write some comments there or anything like that. I'm going to introduce Martin first, and we're going to open it up for questions. If there's questions or if it does get busy and you don't feel like you're having a chance, you can write questions also here in the chat box, or you can email them to us at info@sterndeeds, and then we'll sort of swipe them through that way. But without any further ado, I'm going to introduce our guest speaker for today, Martin. He's someone who's helped me over the last few years get my accounts together and my taxes together. And he did attend one of our little meetups over there in the Producers Club. And he's been very supportive of all this. So, Martin, I just sort of pass it on to you just to tell us a bit about who you are and what you do.
Yeah, it's pretty boring, I guess. I'm just an accountant. So our business specialises mainly in tax for expats or people who weren't necessarily born in the US and have moved here on various visas or for work purposes. And basically we just deal with some of those issues a lot of other accountants might not get to see on a regular basis. So that's about it.
Yeah, no, okay. Now, look, it's not always the sexiest topic in the world, but, it does affect people's bottom line here. And like I say, it's one of those things that it's not a problem until you need someone. And, it's good to understand some of these concepts before it sort of gets to that. As creative, I'll probably say this a couple of times, but as creative people, we're not necessarily tuned in to talk about things like our finances and our taxes until it's too late, and we're notoriously poor at handling them. But I think it is useful for us to, come together like this and have a bit of a chat. So I'm going to introduce Sylvie on the line. She was the first one in today, and she's a hell of a good singer. So maybe she'll do a few bars for us at some point here. But I want to give her a chance to ask the first question to Martin about her situation. Just tell us a bit about who you are, where you're from, and what you do. Sylvie.
Can you hear me?
Perfectly.
Oh, man. Yeah, you hear me?
Yes.
Hello?
Yes, we hear you perfectly.
Okay, no, because I mute, so I didn't. Okay. Well, I'm a singer, and I just had a visa O1 a few months ago, and I'm starting to earn money here. So I don't know what I have to do with taxes. I don't know what I have to do in United States.
Okay. Probably the easiest way to think about it is that the US does make tax really simple. You're either going to be a resident or a non-resident, and we can probably touch on that a little bit later, but essentially if you're in the US for most of the year, you're probably going to be a tax resident. So the US want to tax you on everything. They don't care where income comes from, what country it's from. They just want to try and tax basically everything you've got. If you're a non-resident, which is if you haven't been in the country for the full year, or you're only here for a short time period, then you'll only pay tax on the income from within the US. So I guess the next question then is, how are you actually paid? Are you a W-2 employee or are you a contractor?
I think I'm a contractor. I'm doing some invoice.
Invoice.
I mean, I don't know. I do invoice to the new who hired me.
Yeah, okay. If you're invoicing them, my guess is that at the end of the year, they're going to give you a form called a 1099, which is basically just a summary of all the income they've paid you over the year. What that means is you're responsible for all your own taxes. So you have to make estimated taxes, and you should do it on a quarterly basis and send that off to the IRS. And are you in New York City?
Yes, yes.
Yep. So there's also New York City and state taxes payable as well.
Well, it's complicated.
Now, Nimbus, have you got our website up there, or?
Yes, I do. Yeah.
Okay. On our website, there's actually a calculator you can use to get an idea of how much tax you should be paying.
Okay.
Okay. So yeah, I've got your homepage now on the screen.
Okay.
Is it under Tax Tools?
Yeah, it should be.
I see tax tips, tax rates, taxes due, financial tools.
Let's go to that financial tools bit.
Okay. And then we've got...
And if you go down to just click on the income link.
Yeah. Well, income's got a couple of different...
No, there should be one at the very top that just says income, and then you're looking for federal income tax estimator.
Yes. Okay. Yeah, got it.
Okay. That opens up a little calculator you can use, and that'll give you an idea of, of how much tax you should be, at least putting aside to pay the IRS.
Okay.
But I mean, in fact, I live in, for the I'm living also officially in France, so I don't know. I live in let's say two countries.
Yeah. Okay. So
anyway,
yeah, I mean, there are some tiebreaker rules. There's also some tests that we go through to figure out someone's exact residency. So, the main test is there's two. One called the green card test, which says if you've got a green card, you're a US resident. The other one's called the substantial presence test, where they actually count the number of days. And if you're more than 183 days, you normally end up becoming a US tax resident.
Okay.
Does that make sense, Sylvie?
Yes. 199 days, is it what you said?
183.
183.
183, okay.
Yeah. Okay, so look, Sylvie, we're going to give some other people a chance to ask some questions here.
Yeah.
And,
Thank you.
And then I'll give you a chance to think of some other ones. We've just gone through your little tax calculator here, and we've just, put in some rough numbers. But no, it looks, it looks like a great tool. So just on that question, we did have somebody email in regarding the green card. Her name is Sam from Australia. She said, I've just entered the green card lottery. My husband and I have a business here in Queensland that we would continue to like to operate while we live in the US. Will having the green card have any tax implications? Yeah.
Basically, the minute you get the green card, the US want to tax you on worldwide income. So, as I said earlier, regardless of where your income comes from, so if it's Australian sourced, if it's some other country or anywhere else, the IRS want to be taxing that. Now, there's a system basically between different countries of exemptions and credits, so you don't pay tax on the same dollar twice, but you do end up paying tax where it's going to be the highest.
So they might have to pay tax in Australia and in the US on that Australian income.
Yeah, depends on the nature of the business and the nature of the work they do. I mean, it can get a little bit complicated, but generally speaking, if it's Australian sourced income, so do we know the nature of the business, like what they're actually doing, or?
Yeah, it's a production company. They're running servicing clients, producing videos for them, that sort of thing.
Yeah, more than likely then it's going to be, all that activity is going to be taxed in Australia, and then again in the US, and you'll get a credit for the tax that's been paid in Australia.
Okay. That's cool. Thank you. Now, Jessica, are you still on the line there? First response.
Yes, I am.
Okay. Well, why don't you go ahead and we'll give you the floor here. Just introduce yourself and go ahead.
Well, I'm actually a U.S. citizen. I was born and raised in the U.S., but I just opened my business in July. I'm an LLC corporation, and so this is the first business I've ever owned, but I need to kind of get a little bit of understanding of how I file my taxes separate, because I have a business, but I also work, and so I get my own W-2 from my employer. But so now I need to separate my business from my personal.
Okay. So with the LLC, there's a few options with it. You know, a lot of people, when they have an LLC, it's just considered, it's what's called a disregarded entity, which just means for tax purposes, the LLC doesn't have to do its own tax return. We just basically include the income on your personal return. So you'll put your W-2 income on the tax return, and you'll also put your business income and expenses through the same tax return. You know, depending on exactly how you're treating this LLC, you can get to a position where the LLC files its own tax return as well. So I'm not sure how you've actually set that LLC up.
Well, I have a tax ID and everything, so, I mean, my goal was to separate it from my own personal taxes and treat it as a business, and then,
yeah, you can still treat it as a business on Schedule C of your personal. So on your personal tax return, there's what's called Schedule C, which is where you put your business income and expenses. And that's typically what you can do. Even though it's the LLC, it does go on a separate part of the tax return.
So
if
now,
you want to do,
I just don't want to hurt my family in the long run. So is it like, which way is the more beneficial part for me?
I guess how would you hurt your family by having the business income on the tax return?
Well, I mean, I have children, so I get earned income credit for my kid. I mean, well, I guess not necessarily earned income credit, but I do. I get the child tax credit. So, and my husband also works as well. So.
Yeah, I mean, okay. So, if the business makes a profit, you're going to have to include that as income one way or another. So, even if the LLC, even if the business is treated completely separately for tax purposes, as a separate legal entity and does its own separate tax return, any profit from that business is going to flow back to the owner eventually. Now, whether that's through a distribution, whether it's through salary, whether it's through some other way of transferring the cash flow back to you personally, it's pretty much going to end up back on your personal tax return one way or another.
So even if so basically what I've done is I've set up a bank account, and any money that I've gotten, I just put in there. I haven't paid myself anything at this point. And the reason being is because I'm trying to build up the account. And then when the account actually gets built up, my goal is to actually pay myself as an employee.
Okay.
Does that
that's fine.
sense?
I mean, just a couple of things to be careful of with that. Firstly, any business profits that get generated are going to be taxed.
Yes.
So between now and the end of the year, so between now and December 31, you might want to take a look at what your business is doing over the next 12 months. Are there any expenses you can bring forward? Any other deductions you can claim against that business income? Because as I said, this is the net profit from the business. Your income less your expenses is just going to flow through to your personal tax return anyway.
Okay.
So you can't sort of just say, okay, I'm going to set up a bucket over here, put all the money from the business in that, and just leave it there, and not sort of tell the IRS or not put it on my tax return until I feel like taking a salary from it.
Oh yeah, no. I mean, I know I need to pay my, I need to do up and pay my taxes, but I wasn't going to really do anything else with it besides pay the taxes with that money.
Yep.
Okay.
Yeah, no, it sounds like you've got a bit of a plan there. And, at the end of the year, you're going to have to reconcile that. You're going to have to work out where your business is at. And, I totally understand where you're coming from.
Before the end of the year.
Yeah, that way you can plan for it.
Yeah, so, don't forget, once you go past December 31, you can't do too much else from a tax point of view in terms of, serious tax planning, because it's too late to take the deductions after that. So you might want to take a look, early December or mid-December, see what your profit position is, and then, as I said, see what you're planning for the next 12 months ahead from a business perspective. Is there anything you can purchase, in this year to help bring that profit figure down?
Well, my profit's actually been pretty minimal. I mean, because I literally just started. The first profit I brought in was in July. So,
okay.
I mean, I'm not. I mean, I've estimated that I'll bring in, maybe $2,500, and I've probably spent at least 15 so far in supplies and what I need.
Okay.
So, I mean, next year it's going to be obviously different, but, so I'm just a little unsure of how it will work, but I guess when it comes down to that time, I'll figure it out.
Yeah, I mean, it's going to be fairly, as I said, what you're looking for is a Schedule C, which is the business profit and loss schedule that goes on a personal tax return. And I think you'll find that's probably going to, based on what you've said about your revenue figures, that's probably going to be the best option for you.
Okay.
Cool. Okay. Well, thanks, Jessica. Let's say if you have any other questions, we'll circle back around to you. But
okay.
I'll just have you just mute the line there for a minute, and I'm going to pull up a couple more emails that have been questions that have been emailed in. As we're talking about sort of expenses and for small business, we've got one from Fabrizio here, and he's a video editor like myself, and he edits in his bedroom. So his question is, can I claim a portion of my rent as a work expense?
Not really. So basically the rule from an IRS perspective is you can claim a home office or a home studio or whatever it is you need to do, depending on the nature of your work. The issue comes into it when the space is used for something else other than work. So, if you're editing in your bedroom, it's really hard to say that that's just the workspace and nothing else goes on there. So that's where most people come unstuck trying to claim a home office, is the exclusive use test that the IRS try and put on home office space.
Okay. That's fairly conclusive. There's another question here about, similar to Jessica here, someone who's just set up their business. That they're also, like Sylvie, they're billing as a 1099er. And they're saying, when I bill as a 1099, do I have to set up a business? What does it mean, a DBA?
Okay. I mean, the simple answer is, I guess there's a difference between a company and a business. There's nothing that says running a business means you have to use, an LLC or some other corporate structure. So, there's a subtle distinction there, I guess, but it's quite an important one. A DBA just means doing business as. So it's, you might not want to trade with your own personal name. You might want some sort of a brand name or some other name for your business. And that's all the DBA is. It's just formally registering that, that particular name.
Okay, but so if somebody...
Then,
so if like I'm saying, someone who doesn't have a bit, might be hired on a film for a day or something, and the company says, no, we're not doing W-2s, we're doing 1099s. They can still write that out as under their personal name and not necessarily have to set up a formal structure.
Yeah, exactly. The only thing I'd be a little bit cautious of, in that arrangement, if you're going to be doing a lot of day work or a lot of jobs during the year, every time you go to one of those job sites, they're going to ask you to fill in a W-9 form, more than likely. And basically what they're going to be capturing there is your name, your address, probably your date of birth, and your social security number. You might not want to have your social security number scattered out with, every single job site you go to. So that's where having a business and applying for a Fed ID number or an EIN number, it gives you another number. It links back to you for tax purposes, but it's not your social security number. So that's probably the only thing I'd consider in that case is, you don't necessarily have to start a business, or you don't necessarily have to start a company, but at least you've got a separate business number so people can pay you and you're not giving your social security number out to, 30 random people a year.
Right, and one of the things that often gets asked of is articles of incorporation or articles of some sort of.
Yep.
If you are going to go down that route, you need to prove that you're registered with the state or something like that.
Well, the articles are only going to be if you've got an actual company, and articles are just basically a summary of the actual the corporate itself, that it's been set up properly, that it's in good standing, those sorts of things.
Okay. So, we actually have someone on the line from Australia. She's asked a question on the chat. I'm going to ask it, but then Zoe, if you want to sort of then jump on here, she's asking, is the EIN number the same as the ABN number in Australia?
Very similar. I mean, it's a different number, but it's a similar concept.
Okay. Zoe, can you hear us on the line there?
Yes, I can.
Cool. Why don't you go ahead and introduce yourself, and good to hear from you again.
Yeah, hi, I'm Zoe. I'm a photographer in Australia, and I'm looking at moving to New York to do photography. And here I've got an ABN number, and I charge GST and everything. So I guess was asking if the EIN number is kind of the equivalent of that in the US, and yeah, is there an equivalent to GST as well, like sales tax? Is that something I'd have to look at as well?
Yeah. So the EIN is very similar to the ABN concept, where it's the business has its own number rather than a tax file number.
Yep.
In terms of GST, the closest thing is obviously the sales tax, and it's actually different from state to state, and then different from product to product. So some states will have a sales tax on clothing, other states don't. And then every different service line, may or may not have one. So it's a case of two things. One, sometimes just checking with the state and finding out, is there a sales tax collection obligation on you in that particular state?
Yep.
And then the second thing is you're going to go into a different state, check with every state that you're working in if there's a requirement to collect sales tax.
Okay, cool. I think that answers my question. Thank you.
Well, just while we're talking about Australia there, and I know back home when you are employed, you have a compulsory health insurance. So I thought it might be a good time to bring up a question surrounding the 401k. We have a question here from someone who has started a job and has been asked to sign up for a 401k plan. Do they have to do it, or can they opt out?
Yeah, you should be able to opt out of a 401k plan.
Okay. What are the advantages and benefits there? Yeah.
Yeah, I mean, you've got to be careful with it. I guess one of the big advantages of a 401k plan is you're getting to put money away for your retirement, which, everyone should do. The second benefit is the money's basically tax deferred. So, you don't pay tax on that income, or you don't pay tax on that income until you actually withdraw it from the 401k plan, years later. Some employers will actually offer a match where, and they're all different, but for every dollar you put in, they might match $1 as well, up to a certain percentage of your salary. So they're probably the three key things to consider when you're looking at, should you contribute to the 401k plan or not. And
well, that matching as well. A lot of people feel like they're leaving money on the table if they don't sort of max it out to try and match whatever the employer's doing.
Oh, absolutely, yeah. And I mean, it's extra free money from your employer. So, sometimes it definitely makes sense to, to take it. But
yeah, and
you have to weigh it up. I guess you have to weigh it up against, where are you going to be in 5 years' time? If in 5 years' time you're going to be out of the US and no longer here, does it make sense to set up a long-term retirement plan in the country that you're going to have to, somehow manage remotely or cash out before you, when you leave? So, the other thing to check on is the plan actually any good? If it's a plan that, that isn't getting good returns or isn't going to really do anything for you, then what's the point in putting any money in it at all?
Right, and a lot of our clients sort of don't always get that option of an employer contributing to it. The IRA options, that's sort of equivalent for someone who doesn't necessarily have a 401k option. Is that right?
Yeah, I mean, look, just because you've got a 401k plan doesn't mean you can't have an IRA as well. So, the IRA, if you don't have an employer 401k plan available, then it depends on a few things. It depends on your income level, depends on if you're married, your spouse's income. It depends on if they've got access to a plan as well. And then that'll really dictate the amount you can put into the IRA and if you can claim a tax deduction for it or not. So that's one part of it. If you're actually self-employed, there's about 3 or 4 other different types of retirement plans out there you can choose, and they've all got different pros and cons to them. Contribution limits are one big issue. What's the maximum you can actually put into an account in a year? And they range everywhere from around $6,000 up to $55,000. So it really depends on what plan do you need based on your retirement savings goals, and if you're trying to do it as part of a broader tax planning strategy, how much do you actually need to defer in each year?
Okay. Yeah, I mean we're getting to a stage where people are have extra money to save. They might be doing a little bit better, but this is certainly a tax preferable way of putting money away.
Yeah, being able to defer the tax on income, and this is probably especially the case if you have, from year to year, you might have really good years, then not so good years from an income earning perspective. It might be one of those things where in a really good year, you do want to max out, everything into a retirement plan you can. And as I said, there's certain plans available where you can put quite a lot of money into them in a year. They don't have as restrictive caps as an IRA does. So, what's called traditional IRA, I should say. So that's where, as I said, it might be a case of looking at, right, what's my taxable income likely to be? What bracket am I going to be in? Does it make sense to put a large contribution in or not? And then in the quieter years or a year where you don't have as much income, you could, obviously not make the contribution in that year.
And opt out. Yeah, okay. I've got a question here about health insurance. Nicole says, I currently do not have health insurance. Will I have to pay extra taxes at the end of the year?
Yeah, maybe. So this is a bit of a weird one. So the way it works now is depending on what your income is, there can be penalties for not having health insurance. So it's probably something best on a case-by-case basis to figure out what your penalty is likely to be based on your income and weigh that up against, what's the cost of the health insurance. Because, look, I've had some situations where the client penalty might have been $2,500, $3,000 for not having health insurance. And the clients have looked at me and said, well, I'm still $2,000 better off paying the penalty than trying to get a cheap health plan. So it's, it's definitely a personal choice if you want that health insurance or not. It's probably a good idea to have health insurance with the cost of medical care in this country. But, affordability is an issue for some people. So you just sometimes have to weigh up, is it worth paying the penalty and not having the coverage? One thing to keep in mind, if you're self-employed, you can often claim a tax deduction for the premiums. So that could help with affordability as well.
Yeah. My understanding with this is that over time the penalties will get more severe as Obamacare rolls out. Yeah. Again, it is income specific, but you will,
we're about halfway through it. It's ramping up over 3 years. I think we've just gone into year 2 now of it. So 2015, I think, is gonna shock a few people.
And do you know what those numbers are?
Not off the top of my head, no.
No. Okay. Now, is Julie on the line? Are you able to hear us there?
Yes.
How's it going?
How are you?
Good. Do you have any questions, or do you have anything you want to ask Martin?
Yeah, I mean, basically, I'm a tour guide working in freelance here for 4 different companies. And yeah, I was just wondering, what can I claim for the taxes as a freelancer?
Okay. So you're going to get 1099s at the end of the year then from okay. I mean, look, it's always a tough question, and the IRS have got a really broad definition of what you can claim a deduction for. And what they say is you can claim anything that's ordinary and necessary. So the ordinary bit sort of looks to what industry you're operating in. Obviously an accountant, there's certain things I would be claiming on my tax return that would be ordinary for an accountant that, maybe a film editor or a TV editor wouldn't be claiming, and, vice versa. I mean, unfortunately, I can't claim my flat screen TV, whereas I'm sure some in the editing world are probably trying that.
I can claim like my MetroCard, my phone bill, my...
So if absolutely. I mean, these are the things you have to look at. What would be ordinary for someone in that job to be claiming? And the next bit is probably the key is it necessary for you to do your job? So if you ever have to spend any money in relation to doing your job or something that helps you do it better, there's a good chance it's going to be tax deductible.
Okay. All right.
Did that answer your question? Did you have anything else?
No, for now I'm good.
Okay, cool. We're going to open sort of this back up again just to the sort of general group we have here. Did anybody else have sort of a follow-up question or something related to something that was mentioned earlier that they'd like to ask? Okay. So I'm going to just rattle off a few more questions we have from people who have emailed in. I've only got 1 or 2 more, and then say feel free to jump in with any other questions you may have, or we can sort of wrap this up a little bit early. I had a question here relating to setting up a credit card. Dear Martin, as a freelancer, I always like to have a rainy day fund. What's the best way to keep this? Should I apply for a low balance credit card now so that I can start working on my credit score? Is this important? Will this be important to me?
Yeah, I mean, I'd say yes. I mean, look, having a credit score in the US is almost essential to do anything. From getting a mobile phone to any other sort of consumer debt. So, if you can get a secured credit card or a low balance card and just build that score up over time, it definitely won't hurt you. So yeah, that would make sense to me. Was there another part to that question?
Well, just relating to the credit score. How is that beneficial? I mean, I understand you can get better rates on credit later on. Just, I guess it's speaking to the freelance lifestyle. Like you say, you have a lot of income at one point and not so much later. Just the sort of the pros and cons of, particularly for people who haven't had a credit card here before. Often the way is I don't want to touch it because I don't trust myself, or I don't want to. But the way they assess your credit worthiness really does depend on your having a credit history.
I mean, look, at a very high level, whenever you try and get finance for anything, there's normally 2 criteria that that the company's going to look at to say are they going to give you a loan or not. The first is, can you actually afford to pay the loan back? Because as much as they want you to take the loan and pay interest, they actually want their money back in a timely fashion. So that's part 1 of their decision process, is going to look at, can you prove to us you're earning enough money to actually pay this debt back? So the things you'd be looking at there are making sure that you're as organised as possible, especially if you're going to have years of high and low income and those sorts of things. most banks, finance companies, with self-employed people or freelancers will have a look over a number of years. They'll average your income out over a few years. So you can, by having really good records the whole way through and being able to show consistently, how you manage your income and how you, having good records is part of the battle for that. The other thing they're going to look at is something like your credit score. I think the irony of, the US position, we saw the housing bubble. All they really cared about was how good your credit score was. The fact that you couldn't necessarily afford to pay the loan back wasn't such a big issue, and that's why they got into the mess they were in. Things have tightened up a little bit since then. So now they're certainly looking at, can you pay the loan back as well as the credit score. So part of the credit score, it's made up of a number of factors, but one of the things that does sort of weigh quite heavily is, have you actually had access to credit and been able to manage it properly? So that's where having a credit card that, has been, you use it on a regular basis, you pay it down every month, you don't have any problems with it, that's obviously going to help towards building that score up over time. And if you never need to borrow money and you're never going to get, even a mobile phone, you're going to need this. You're entering into a credit contract there. But if you never need money, it doesn't matter what your credit score is. But I think, eventually most of us will at one time or another need to go and borrow for something, whether it be for a car, or a house or something like that. There will be a time where, you may need to access that. So that's where having that, a good credit score behind you will help you.
Okay, so we've got a couple more questions that have actually come on the chat line as you were speaking here. Just regarding to business expenses, Jessica asked, if I'm doing my business out of home, can I use anything like rent, power, internet as a write-off? I guess, Jessica, if you want to jump back on here, I'm guessing these are necessary to your business and a part of how you do it, right?
Yeah, I think we sort of touched on this a little bit earlier with the home office expense. There is an exclusivity test where the area that you're using for your home office has to be used wholly and exclusively for business use. So it can't be, I'm just trying to think, some people try and do the calculation saying, well, I work at home 20% of the time, so I'm going to take 20% of my rent. That really isn't going to fly. You have to look at it from a basis of what's the total square footage of my apartment or my house, what percentage of that is used for my home office that I don't do anything in other than work, and that's the right way to do it. And by right way, I mean if you got audited, you'd be fine.
Okay.
Okay, and what about and how would I do that with like power, or like do I do the same thing?
Yeah, so you can apply the same. You can apply the same proportion. So you can apply let's say it's 20%. You can take all your utility bills, your rent, even things like insurance if you had renter's insurance. Basically any of those expenses, and you can write those off, in the same proportion or that same pro rata of business use of the home.
Okay, so as long as I do it by the square footage, then I'm okay.
Yeah, that's generally the safest option. Is you put the total square footage of the property, and then the square footage of that area that you use just for work, and that gives you the percentage business use.
And can you claim computer too? If it's what you use to work at home.
Sorry, I missed that question.
The computer. Can she claim her computer as a work expense?
Yeah, absolutely.
Yeah. Okay.
So you'd calculate that as a percentage of the overall purchase, or how does it work with items like that?
Yeah. I mean, it's one of those things where you need to come up with some sort of a reasonable estimate of how much of the computer is work use, how much of it's private. To be honest, if it's a really small proportion of private use, it doesn't matter too much. If it's a really small proportion of business use, it's normally not worth claiming it.
Okay.
And is that something you need to depreciate over time, or is it you just sort of take the price of the computer?
Yeah. And look, the last few years I've actually had accelerated depreciation where, depending on the price of it, and most computers are relatively inexpensive, I guess. You can pretty much write those off in the first year.
Okay.
Oh, okay. Yeah. So, say for instance, in Jessica's case, if she's planning for next year and wants to buy that computer this year, that'll count towards this year's taxes.
Yeah, so the accelerated depreciation's still in for this year. So yeah, you can just write the full amount off. I mean, look, I think the limit's something like $500,000 of business assets. So I think you should be safe with a laptop.
Okay, so sorry, Zoe had a question here. Is it possible to get a credit card if you've only been living in the US for a few months?
It's a good question for your bank, to be honest. What they have got that might help you is something called a secured credit card, where basically you'll go and put a deposit down of, say $500, for example, and they'll give you a credit limit of $500. After a few months, once they see that you're paying the credit card off and all those sorts of things, they'll generally give you that money back. That's probably the easiest option to get started.
And do all banks have those?
No, not all of them. Some of them won't. I think Bank of America still has one.
Okay.
And I know Chase doesn't.
We found a really good one with Capital One actually, and
Okay.
depending, it's something like you can put a $50 deposit down. It'll buy you $200 worth of credit, and then over a couple of months they'll start sending you offers for other cards and higher limits and all that. That's sort of like a starter. It's like a credit building stage, I think. But to answer your question, Zoe, when you first get here, yeah, you're better off putting some money down and getting, borrowing your own money back in a way, and then it'll start snowballing fairly quickly.
Okay, thanks.
Cool. Now, Sylvie, did you have a question there? I see you on the chat room here. When do I need to declare firstly when you haven't been for a long time in the US?
Yeah.
Just explain that question for me.
Well, I came in United States in November last year. I didn't, and I left 2 times the USA for 1 month every time. I didn't do anything for taxes yet. So I don't know. Do I have to do something now?
Yeah, it really depends on what your income's been. So if you said you arrived in November, so November to December of, 2014, there's a chance, if you had no income, then it doesn't matter.
Well, I don't have a lot of no, this year I didn't really have too much income because I just arrived and I'm an artist, an entertainer. It's not. So do I have to do something, or at the moment, if I didn't earn a lot of money, I can just
yeah, so
wait
it really depends. If you earn nothing, you definitely don't have to do a tax return. If you earn something, you might have to. So if you're getting paid on 1099s and you're a freelancer, more than likely you will have to file a return. There might be what's called self-employment tax, which is the Social Security and Medicare. Depending on what your other expenses were, if your expenses exceeded your income, then again you don't necessarily have to do you'd have to do the tax return to disclose the income and expenses, but there won't be any tax payable.
Okay. Thank you.
Okay, so we've got one last question here from Julie, and I think this is probably going to round us out for the night here. She says, I work for an American company and a French company, and the French company is paying me in my French bank account. Do I have to claim this amount for I think she's talking for her U.S. taxes.
Yeah.
Basically, if you're a U.S. resident for tax purposes, the answer is yes.
Then so yes, okay.
Yeah, so if you're a U.S. resident, they want to tax everything. They don't care where the money comes from. They just want some of it.
Okay. I am a U.S. Resident, so...
Yeah,
okay.
So it's all fully taxable in the U.S. then.
Okay.
Okay, cool. So, look, if anybody has any other questions, I'll just have you, we'll happily put you guys in touch with Martin and Trans-Pacific Tax Services.
Well, sorry, it seems a little complicated. In fact, at least the first year, it seems to me that because my bank, TD Bank here in the United States, told me that if I can prove that I pay taxes in France and not here, well, it's really difficult. I guess that it's better finally to use an accountant like your guest.
Absolutely. Yeah, no. Look, we have to talk
way.
in general terms. When we do these sorts of talks, we don't like to talk specifics too much because we can't give specific advice. But I would absolutely encourage you to talk to Martin. I'm happy to give you his, we've got his phone number and email address here. And, if you want to contact us at info@sterndeeds, we'll happily put you in touch. But, we want to sort of cover a whole lot of things in broad strokes here without sort of handling any one specific thing.
Yeah, I'm just saying that lots of people here use accountant. Well, you understood. It seems very deep. Well, anyway, it was nice to have this. Oh la la! Pardon.
I can help you if you need some help in French. I can help you. Française.
Oui, ok. Yeah. Ok. Merci. Bon, bah, je sais pas, il faut qu'on se trouve. Comment vous appelez?
We can talk later about it. Yeah.
Yes.
My name is
Julie. Julie Gage 84.
Oui.
Okay.
Thank you, Julie.
So very good. If anybody else wants to sort of jump on and say goodbye, we're probably going to wrap this up. So we are going to, please hit us up on our meetup page, or send us an email. Let us know how you thought, how it went. We've got another event coming up next week, actually. It's here at the Producers Club again. We're going to just talk about getting the O1 visa and what's involved there. But thanks again. Thanks for Zoe for tuning in from Australia again. You seem to be really getting into this webcast, which is great. And of course, we're going to put a recording of this up some other time. But thanks very much, Martin, for donating your time today. It was really helpful. And
no worries at all.
Thank you,
really
Martin. Thank you.
Very much.
And Sylvie, send us your show information, and we'll put it up on the social media like Twitter and Facebook.
Yeah. Yeah. Okay. Yeah, she's giving us a couple of messages here, but.
Thank you very much. In fact, I mute when I type because I followed you what you said because I'm a nice girl.
Fantastic. Well, okay. Well, thanks again, guys. Have a good night, and thanks again for being a part of this. See you later.
Thank you very much.
Bye.
Okay, bye.
Bye.
I come from a land down under. Bon. Alors.